keystone concepts that I talk about in my book is something that my dad taught me a long time ago. And he said, you never lose money in real estate if you never have to sell.
Good one. Mm-hmm.
Now, my dad was actually in the food service industry, but prior to that, he had been a residential real estate broker. So he knew a bit about real estate. And he told me that. He's like, it's very simple, but it's quite profound when you think about it, because the real thing here is that with real estate, you need to be able to hold these properties for the long term, because there's cycles.
Mm-hmm.
The market goes up, the market goes down. Nobody really knows when that's going to happen, when things are going to go up and for how long, and when they're going to go down and for how long, right? People try to guess that all the time, just like they try to guess that with the stock market, and people have systems and ways that they figure out. And even a broken watch is right twice a day, right?
Mm-hmm.
So if you keep making the same prediction, eventually you're going to be right. But I know that I don't know when those kinds of ups and downs are going to happen. So if I can get a property that's providing me with cash flow consistently, then I can exit it when the timing is right.
Welcome to the Wealth Through Real Estate Investing Podcast, your source for real-world strategies focused on creating long-term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and to reach the lifestyle you always wanted. And now, your host, Dwaine Clarke.
Hello, and welcome to the Wealth Through Real Estate Investing Show. This is your host, Dwaine Clarke, and today we have Matt Picheny. Matt is a multifamily real estate investor and managing partner at MJP Property Group. Matt, thank you so much for joining us on the show, and how you doing, my friend?
Hey, Dwaine, it's a pleasure to be here. Thanks for inviting me on.
Really looking forward to it. And actually, when we just first hopped on the call, I was really excited because I said, hey, I actually know this guy. We met in Boston like a year or two ago. So it's actually good to actually connect again and kind of, I know the way when we initially spoke and kind of was learning about each other's backgrounds, didn't really get the full story. So glad that you're able to come on and talk a little bit more about that. So for the audience, would you kind of talk about how you got started in real estate and what your current focus is?
Sure. How I got started is a bit of a story, and I'll do it quickly. So I started investing in real estate as a hobby. I used to be an actor, and then I got involved in advertising and digital advertising. And I lived in New York City when I was doing that. I grew up in Florida, moved to New York, was doing that. And I was in the advertising world, sort of climbing the corporate ladder, if you will, for about 18 years. And for the last 10 years of that, I started doing some real estate as a hobby. I had, previous to that, purchased a primary residence in New York. I bought a co-op, and within like a little over 2 years, I sold it and moved into a much better place and like quadrupled my equity. And I was like, wow, this real estate thing, this is super powerful. Let me see if I can do this beyond just like where I live. And so I started investing as a hobby. Like I said, I did that for about 10 years. And then out of the blue, my wife was approached with a really cool job opportunity, but it was in Miami, Florida. So we had to move from New York to Miami, which is not such a bad thing. The weather's beautiful in Miami.
Mm-hmm.
But when we made that transition, that's when I transitioned into doing real estate full time. So at that point during the transition, I became a full-time real estate investor. So I started investing passively in a large amount of deals, and also actively continuing and getting more involved in scaling the business. And so I had done some fix and flips, but to really scale the business, I needed to, don't get me wrong, there's people who have fix and flip businesses and do very well, but the kind of where my trajectory was, I felt that I needed to get involved in multifamily and in syndications. That's where I really felt were sort of the numbers and the scalability that I was looking for.
And can you take us through kind of your educational journey? I know like a lot of people, they get inspired by a book and they go to a course, or they get, educated by some teacher. You kind of got your first experience by, your first home, and then flipped into another larger one and built up your equity. was there any type of educational transition that you acquired along the way, or was it more just kind of like through your experience that you just kind of got your feet wet through actually doing things?
Yeah, Dwayne, that's a really great question, and it is a mixture of the two of those things. So number one, you're right. I did. I got a lot of experience. I learned through, the school of hard knocks, as they say, through working and doing projects, right? And then when we had made the move to Miami and I transitioned into doing this full time, I had a lot of time to work and to learn and to get myself really educated. And so I did that through lots of podcasts, through lots of books, through going to many webinars and seminars, conferences at many different locations throughout the country, really just dove in and immersed myself for about 2 years of like deep dive, and then I continue to do that all the time. And we then moved to Boston, and I did two certificate courses, like it's multiple courses that you do at Boston University. And I'm always learning. I think you can always learn. I'm actually putting a book together right now, and the whole premise of this book is taking all of these learnings that I have from all this, research that I did, all these thousands of hours, literally thousands of hours of podcasts, books, seminars, conferences, and condensing that all into one book that's and it's specifically for people who are interested in passive investing. So I'm hoping to sort of take all that information and also the things that I learned from running deals myself and passively investing. I have several thousand units that I'm invested in, but 75% of that are deals that I'm a passive investor in. 25% are deals that I either own on my own or deals that I'm a sponsor on, or general partner on. But a lot of it is passive. So I have experience doing a lot of passive investments and want to sort of share that knowledge and sort of pay it forward, I guess.
Yeah, that's great. Yeah, because a lot of people that are like, thinking about maybe that's their first step is on the passive side, and you dipped your toe into both is very well. Can you kind of talk about kind of your current portfolio, your holdings, like what type of markets you guys are in, and then when you saw those deals, what type of characteristics attracted you to those deals?
Sure. So I have, like I said, several thousand units. And they're in many different locations. I don't really have very much on either of the coasts, except for Florida and Georgia. I have some. I don't have anything in Georgia at the moment. Actually, we sold some things we had in Atlanta, looking for more. I have some things in Florida, and I have a lot in Texas, Kansas, Missouri, Oklahoma, Arizona. So sort of that mid-south, south, mid-south kind of region of the country. And the reason why is that's where there's a lot of migration. That's where we see, a lot of, employment growth, and the numbers really just make a heck of a lot more sense than they do. I'm based in Boston, Massachusetts. It's really hard to find something in Boston where you're going to really be able to sort of have a lot of growth. Now, don't get me wrong, the Boston real estate market is spectacular. It's extremely diversified, all the different employment sources. So it's a wonderful place for capital preservation. It's an amazing place for capital preservation. But the way people buy properties around here, they're buying them with very, very little to no cash flow. And they're looking for sort of that long-term appreciation. And you had asked about the characteristics. That's not one of the characteristics that I look for. So the physical characteristics that I'm looking for in deals that I'm investing in, and my criteria is the same whether I'm a passive investor or if it's a deal I'm going to sponsor. Exact same criteria, because I also passively invest in my active deals, right? I put my money where my mouth is. But the criteria that I look for, I'm looking for B and C class properties in good areas that have a value add opportunity, so that we can force appreciation through making those improvements to the property, right? We make improvements, we can charge a little bit more rent, we can bring expenses down through operational efficiencies. I'm an expert when it comes to doing that. When we were in New York, I was a project management professional for many, many years. I'm really good at operating things and operating them super efficiently. So we do that increases our net operating income, right? And that increases the value of the property, even if cap rates go up, right? And as cap rates go up, means values are going down because of that. inverse relationship between the cap rates and the value. So, you know, even if cap rates go up, we're still doing very well. And the other thing that I look for in all of my deals is that they're going to have really strong cash flow. I want double digit or very high I want either double digit or very high single digit cash on cash returns during the hold period. You know, one of the keystone concepts that I talk about in my book is something that my dad taught me a long time ago. And he said, you never lose money in real estate if you never have to sell.
Good one. Mm-hmm.
Now, my dad was actually in the food service industry, but prior to that, he had been a residential real estate broker. So he knew a bit about real estate. And he told me that. He's like, it's very simple, but it's quite profound when you think about it, because the real thing here is that with real estate, you need to be able to hold these properties for the long term, because there's cycles.
Mm-hmm.
The market goes up, the market goes down. Nobody really knows when that's going to happen, when things are going to go up and for how long, and when they're going to go down and for how long, right? People try to guess that all the time, just like they try to guess that with the stock market, and people have systems and ways that they figure out. And even a broken watch is right twice a day, right?
Mm-hmm.
So if you keep making the same prediction, eventually you're going to be right. But I know that I don't know when those kinds of ups and downs are going to happen. So if I can get a property that's providing me with cash flow consistently, then I can exit it when the timing is right. And so most of the deals that I do, we look to exit somewhere from 5 to 7 years, but we usually get debt on these properties from somewhere between 10 to 12 years of debt. Mm-hmm. That way, if we're in the bottom of a market cycle 5 years from now, we've got another 7 years to get out of that cycle and for the tides to turn if we're in that situation.
I love that. I love that a lot. And that also kind of covers kind of like the overall criteria. But can you kind of talk about kind of the criteria or some tips for on the passive side, you having so much experience over there, as far as what a passive investor should look at in regards to working with an operator, you know, like track record and, you know, things like that, that they should be watching out for in order for them to make sure they make a wise investment?
Yeah. So I wrote an article that's in Forbes that's about that. I have another one coming out that even drills deeper into that. And what I talk about in those, and also in the book, is there's 3 things that I think a passive investor needs to look at, right? And I'm sure anyone who's listening to this probably already knows that, right? Because you've been helping, you know, sort of educate them and things of that nature. But it's the sponsor, the market, and the deal, right? So talking about the sponsor, yeah, I mean, it's really important. Like the most important thing is, who is that sponsor? I run a meetup here in Boston, and so I have a lot of passive investors come to me, and they're looking maybe at their first deal, and they're like, hey, Matt, you know, what do you think of this deal? And the first question I always ask them is, how do you know the sponsor? Mm-hmm. Because I think how you met the sponsor is important. If it's somebody that you know, that you've been friends with or that you've worked with in the past, you've known for years, that's really good. If it's somebody that maybe a friend of yours, you know, Dwaine, let's say you tell me that you know somebody who's doing, you know, this really good deal over here. Maybe they don't even have a deal at the moment, but you're like, hey, I just worked with so-and-so and they're a really good syndicator. Well, that's a good way, right? Through that word of mouth from somebody else who's invested in their deals, right? But when it's someone, because I've had people who say, well, I don't know, I don't really know the guy, he just kind of reached out to me on Facebook. And I'm always a little like, you know, a little worried about that. I mean, first off, it seems as though some of the times when they're being reached out on Facebook, they actually have a deal going on, and it turns out it's not a 506C, it's a 506B. So it's actually, they're breaking the rules by doing that, reaching out to somebody. You're supposed to have already a pre-existing relationship with them. So those are like big warning signs for me when that kind of thing happens. So, you know, how do you know the person? How did you meet them? What is their experience and track record, right? What have they done? Have they done deals? And if they've done deals, what were their roles in that deal? And what is their role going to be in the new deal? You know, there's a lot of people out there who get involved in deals as a general partner they're really not doing anything. They're really just kind of raising money, which is breaking the SEC rules first and foremost. But secondly, they don't have any real say in the deal, right? So if I'm investing in somebody's deal, I want to know that if things are going to go off the rails, things are going bad, that I can call that person and find out what's going on. And especially since I have a little bit of experience, maybe I can make a suggestion. But if I make a suggestion and that person doesn't actually have a seat at the table, they just kind of like raised money for the deal, but aren't truly a decision maker. They don't have a seat at the table. That's problematic for me. So that's one of the things that I dig in when I'm talking with the person that I'm going to be giving the capital to. Like, what is your role? Do you have a seat at the table? Are you a decision maker? Because some people might have a track record that they've, done a bunch of deals, but maybe they haven't really had a seat at the table. So that's something that's important. And then another thing that's very important is just making sure that you're aligned with one another philosophically. I had an opportunity to invest with a syndicator who is well known and makes a lot of people a lot of money, but that person, I saw their properties and they were basically just like cutting services and cutting expenses and not really adding value to the property. They were basically like a slumlord, if you will. And I knew that I would make money by investing with them, and I had an opportunity to. But when it came down to it, I didn't feel comfortable doing that because I wasn't aligned philosophically with what they were doing. My own personal investment philosophy, whether it's passive or active, is about trying to improve lives. When I want to improve, as a syndicator, I look to improve the lives of both the residents of the communities and also the investors. I'm not a charity. I'm not a charity, right? I'm not here to only do great things for the residents. We want to make money. We want to make a profit, and a good profit. But I think we can do that by helping people in a win-win situation rather than doing it at the detriment of other human beings.
I love that. Yeah, that's great. And like I said, I really love that point. Like I said, it's just aligning those actual values and interests of that's the point, because there's so much opportunity that's out there. I think everyone should just take their time, do their research, see if all of those boxes check, and then move forward. And it's great that you have, meetup groups that you can talk to people and maybe get references and find out other investors that got involved and see how their experiences was. So those are great points. I love that a lot. And as far as your book, is that coming out soon? When can we expect that? And then do you have any kind of idea like what's going to be covered in that book along with the kind of passive investing?
Yeah, so the book will come out in 2021. I don't have a publication date. We are editing it as we speak, and then I'm not sure exactly how long that will take. Hopefully not too long. So we'll go through the editing process, and then it needs to be published, and then we have to get it, out, and then we'll do some sort of pre-launch for a few weeks, and then it'll launch. So I'm hoping. I don't want to put any dates out there, but I'm hoping definitely before the end of 2021, hopefully mid 2021. And so what I've done is essentially taken the story of me and my journey in real estate and pulled out these key concepts, these lessons, and hopefully investors will be able to read this book and get these different insights and learn how to sort of get the concepts behind a lot of this stuff. And then actually there's some actionable advice on how to look at deals when you're reviewing a deal that a sponsor has, and also some actionable advice on how to sort of game plan sort of where you are. I talk about how I did a gap analysis, and I looked at where I was from a passive income perspective and where I wanted to be, and then how to bridge that gap over a span of many years, right? This is not like a get rich quick scheme, where, in 2 years you'll retire with billions of dollars, right? It's real estate is someone said, I've heard people say a get rich slow type of thing. It takes time. You build up over time more and more assets, and then you start to build up, I think you start to get some momentum sort of like a snowball, and
Mm-hmm.
it goes from there.
Awesome.
So yeah, and that's really sort of kind of the ideas behind the book.
Yeah, well, we're looking forward to that. And again, once we get ready for any pre-launch, definitely have you back to give some more insights and tips and stuff like that, and get ready for that launch. To kind of learn a little bit more about you.
And people could sign up for my newsletter too, and get information, because I'm starting to trickle out information about the book even as early as now. So
Okay,
yeah.
awesome. Yeah, we'll make sure to include that into the links for the show notes, so everyone can get a copy of that. But just kind of learn a bit more about you. What's take us through like a typical work day for you, and do you have any special morning routines?
Well, I don't have any special morning routines. I tend to wake up early often. So my special morning routine is starting my work day early. I know certain people do things like journaling and things of that nature. Um, I don't. I'm doing plenty of writing for the book. Um, I work from home. My office has been invaded by my two little kids and my wife because of COVID, right? So my wife is working from home. My youngest is not old enough for school, and then the older one she's in first grade. She's doing school remotely here, so that makes my what was my usual work routine a little bit different. At the beginning of COVID, I was just swapping with my wife on the kids. Eventually, we got to a point when the school year was starting back up here, hiring somebody to help us out so that we could actually do our regular work during regular work hours. And I spend a lot of time on email. I spend time having conversations with potential investors who might want to invest. I spend a lot of time with the properties, right, that I'm managing. So I'm not a day-to-day sort of property manager, but I am an asset manager, and so that requires from me, at least the way that I like to run things, a weekly call. So we have a standing weekly call with the property management team at every single property. And so during that call, so I have that thing I mentioned earlier, a project management background from doing it for 18 years in New York City on these big projects. We'd have like 100 people. We'd be working on a big project for Visa or Coca-Cola or Verizon, right? These big things. So for me, I'm just really used to keeping people on track, right? As a project manager, my job was to make sure things got done on time and on budget. So, and I have different tools and tricks for having done that over the years. And so we do status updates, like I said, on a weekly basis. We'll go through, we'll look at the status on all the different projects. We'll talk about the KPIs, which are key performance indicators. So we'll look at those at a property. So what a KPI for a property might be is vacancy, or collections, income, how much traffic did we get? Like how many prospective new tenants have come in, and what sources did they come in from, and did they convert? All those kinds of things. So we're looking in depth at all of that information on a weekly basis. And then inevitably, there's always many things that come up during the week. The rest of it is pretty much handled via email, which is one of the reasons why I'm on email a lot. But a lot of it is dealing with circumstances that come up, some unforeseen thing. Oh, we just had a pipe burst, we're going to call in a plumber, or the hot water heater just went, like, can we buy a new one? Because I have certain thresholds in which if we're going to go outside of our regular budget or high ticket price on certain items, then they need approval, right? So they'll ask me for approval. So I need to be available and ready to respond. And the cool thing is I can do that from anywhere, right? As long as I have a phone and my laptop. So I can sort of travel anywhere and do my work from anywhere, which is nice. We'll be going away for a couple of weeks at the end of the year, and I'll be able to still work remotely a few hours a day. I always have my cell phone, so if something comes up, I'm reachable. So yeah, I mean, that's kind of my typical day. I would say that none of my days are typical. Right now, I'm doing blocking out time to actually do writing. I do a little bit of, I make sure I have a little bit of time to do social media every week. I try to do a couple posts here and there. That's pretty much it.
That's nice. So I appreciate, I always ask that because it's always interesting on how everyone kind of runs their day, running their businesses and things like that. So I appreciate you sharing that. And with all your success and, all of the projects you've been involved with, all of the lives you changed, with your buildings and everything, what can you say that you're most grateful for?
Most grateful for, I think, I look at the whole thing, and I talk about this a lot, is, it's all about relationships, right? And so for me, I'm really grateful for sort of the community. Here in Boston at our meetup, like we just did a thing, we just had our like year-end wrap up the other night. And I was like thrilled to see like our whole meetup did over $150 million worth of real estate transactions this year. And like, that's just, I'm just grateful for that. I'm sure I was a part of that, but there was like so many people that I think are getting inspired by this and are actually out there and doing things. And I'm just grateful to sort of have this community of people both here locally and just through the other networks. I'm involved in some masterminds and mentorship groups and things like that. I'm just grateful to have such wonderful people around that are all sort of like-minded and trying to really kind of move, I think, things forward in a really good way. I don't know, I'm grateful for that, I think. And
awesome.
Of course, my family and my health, right?
Yeah.
Of course that. Yeah.
Awesome. And then as far as how do we get in contact with you, we'll make sure to have all your information to like your newsletter and things like that. But is there any information you're willing to share with us today?
Yeah, well, people can reach out to me. I'm sure you'll put it in the show notes through my website, which is mjppg.com. And you can email me, Matt, M-A-T-T, at mjppg.com. By doing that, you would get on my newsletter, which goes out once a month. And so it's not like you won't get spammed, I promise. Not really looking to sell anything. But I will have information about the book on there. So, and I intend to give away copies of the book. And what I'm going to be doing prior to the book being finalized, so relatively soon, is ask people who are on my newsletter if they'd like to be a part of that book by maybe pre-reading a chapter. So they'll get advanced copy of the book, like either a chapter or the entire book, and also be able to provide feedback, which will be helpful for other people who are reading the book. And you get some other goodies too. So anyone who may be interested in something like that should definitely just sign up for the newsletter so they'll get information when that opportunity arises.
Absolutely. Well, appreciate you sharing that. Well, Matt, it was a pleasure speaking with you and catching up with you again. And like I said, look forward to checking you out again in Boston once we'll be able to do a little bit more traveling. But yeah, it was a pleasure meeting you for the first time and having you back on the show. So best to you and the family, and look forward to talking to you again soon.
Thanks, Dwayne. It was a real pleasure. I enjoyed our conversation, and I definitely look out to hanging out with you next time you're up here, or if I'm in Connecticut.
Yes, absolutely. Looking forward to it. All right. Take care, my friend.
All right. Take care.
All right. Bye-bye.